Imagine waking up in Copenhagen to headlines about Denmark quietly rolling out new banknotes, easing interest rates, and subjecting its financial institutions to unprecedented stress tests. At first glance, these might seem like small, technical adjustments in a relatively small European economy. But as you peel back the layers, the implications reach far beyond Denmark's borders, touching hedge funds, offshore banking, and even the long-term future of the European Union's financial architecture. Denmark, with its krone pegged tightly to the euro, sits at a fascinating crossroads. Unlike Eurozone countries, Denmark maintains its sovereignty in monetary policy, but aligns itself with the stability of the European Central Bank through its peg. This arrangement has always been viewed as a compromise, gaining the euro's credibility while preserving local control. But with global investors looking nervously at inflation, interest rate cuts, and currency realignments, Denmark's 2025 moves suddenly take on outsized importance. Let's start with the stress tests. In early 2025, the Danish Financial Supervisory Authority mandated an expanded stress testing framework for its banks. Traditionally, stress tests measure resilience against shocks like economic downturns or housing bubbles. But these new tests incorporate geopolitical risks, energy market volatility, and climate transition shocks. Why? Because Denmark's financial system, while domestically stable, is deeply tied to Europe's energy imports and green transition financing. Offshore wind projects, carbon credit markets, and ESG-linked bonds have created exposure that isn't just local, it's global. Hedge funds tracking green investment indices are now laser-focused on how Danish banks score in these new tests. If banks stumble, it could signal cracks in the broader green finance system Europe is trying to build. Now let's talk rate cuts. The Danish National Bank recently hinted at following the ECB's softer monetary stance, but with its own timing and nuance. Unlike larger economies, Denmark doesn't have the same inflationary pressures, meaning it has room to cut earlier or more aggressively. For offshore investors, this sends mixed signals. On one hand, lower rates could weaken the krone slightly, creating opportunities in FX markets. On the other, it makes Danish bonds less attractive in yield terms, but safer in terms of long-term peg stability. Global macro funds love these nuanced plays: short-term volatility, long-term anchor. And here's where it gets strategic. If Denmark cuts faster than expected, it could spark a capital flow shift out of neighboring currencies and into safer havens like the Swiss franc, or even into gold and dollar-denominated assets. Then comes the most intriguing piece: the new banknotes. Denmark is in the process of unveiling redesigned currency notes infused with new security features and sustainability-linked design elements. At face value, it's about countering counterfeiting, but the subtext runs deeper. Analysts suspect these new banknotes are also Denmark's subtle hedge against the digital currency wave. With the EU pushing for a digital euro, Denmark has remained cautious, signaling that physical cash will remain central for now. But rolling out new notes in 2025 is a bold statement. Denmark wants to future-proof its monetary sovereignty while still tied to the euro peg. Offshore bankers and wealthy clients read between the lines. This is about flexibility and independence in an era where monetary systems are becoming more centralized. Now, how do all these threads tie together? The stress tests test resilience, the rate cuts show policy independence, and the banknotes reinforce sovereignty. Together, they suggest Denmark is preparing for a bigger shift, a world where Europe faces fragmentation risks, where digital currencies challenge cash, and where green finance could both stabilize and destabilize economies. For hedge funds, this means one thing: opportunity. Arbitrage plays around krone peg adjustments, speculative positions in Danish government bonds, and green project financing derivatives are all on the table. For offshore bankers, it signals a safe yet flexible environment to park wealth. And for global investors, it's a case study in how a small economy can punch above its weight in financial geopolitics. The question now isn't whether Denmark's 2025 moves matter. The question is whether these moves are signaling a quiet preparation for the next European shock, and whether investors smart enough to decode these signals will find themselves ahead of the curve. Because in finance, the moves that seem small today often become the tremors that shake tomorrow's markets.